In today's video, I'm gonna show you traps in the market that you need to watch out for and avoid. So we're gonna show you how to find them and then how you can capitalize on them for very high quality trade setups. Let's dive in. All right, so in front of us right now, we have Great Britain USD, also known as cable, on the 4-hour time frame. And I want to show some common traps that a lot of retail traders fall victim to, and then how to put a spin on those and how to capitalize on them and find really good high quality trade setups. So if we're looking at this, there's a couple key things that we can point out here. So the first one is just looking at current price action, we can see a strong impulsive move. So we can see once this low is established here, we have 1, 2, 3, and now 4 weeks of bullish price action. Now there's a couple things I want to point out here. So the first one that just really jumps out is we have a big break retest level. So we can see resistance here, and now price has broken through it with a strong impulsive move here. We can see that here at that 4-hour candle. Price came down and retested, now using that as support, pushed up, came back down and retested that area a second time before consolidating a little bit and then eventually showing an impulsive move. So we can also make note of this big flag here, this big trend line, where this is just a very common combination of retail concepts here, using these support resistance in different forms for opportunity. So any type of major level like this, a lot of people want to stretch it out and just see, okay, price reacted here on the buy side and then on the sell side, making this level pretty significant. And then if it pushes into it, look for shorts. If it breaks it, now it's on the opposite side, let's look for buying. So a lot of opinions get accumulated around these areas here, building a lot of money. So we know if people are buying this support level, we know that there's a lot of money building up in the form of stop losses under these lows. So we have a low here, and we also have another low here, and then this low here at the bottom before price turned bullish. And it's the same deal with this trend line. When price is pushing up against this trend line, a lot of traders are going to do one of two things. They're going to look for selling anytime price pushes up. So we can see price tested here, came down, strong impulsive move into this support level. Looks like it was kind of making a flag pattern here, pushed into that level again. Also another little break retest level here as well. And we can see price pushed up into that trend line. It looked like it was coming down until it completely reversed. Now once that happens and you get the breakout, especially when price action looks like this, strong impulsive move, that's going to lead traders to believe that this is going up. And what they're going to look for is this price to test this trend line, or maybe this level here, or even come back down to this support and look for something like that, another break retest. Now, if traders are going to come into the market and use that for opportunity, they're most likely looking for the low or the high that's in the near vicinity, which would be this low here. So when we identify these areas here where we know money is building, that's areas that we want to avoid. And we want to actually use those for our target. So that's why you can see all of these lines that I have identified are green with a dollar sign over here. So a lot of these patterns here, when I see it, it's taking the observe the masses and do the opposite approach. So if I know everybody is going to be looking for buys here, I want to think to myself, where can price go that's going to hurt the most people, stop the most people out? And that would be coming down and attacking these lows here. So doing something like this, kind of pulling the wool over the traders' eyes and believing them, making them believe price is going to do one thing. In reality, it's doing something completely different. And we want to be in alignment with that. And we can easily do that just by observing things like this, where people are looking for opportunity, and more importantly, where they're putting their stop losses. Where they put their stop losses, again, that's where we want to target. So I'm going to show you an awesome setup that I took just recently and used this exact approach here. And where most people are looking for opportunity here, this is an actual trap here. And all this money's building up down here and created some really nice targets. So once I saw this, I came on the computer, I came into my office, and I started to look at the price action that was developing in London leading up to New York Open, which would be the overlap at 8 a.m. Eastern. So I'm gonna drop down a couple time frames. So here we're basically just diving into the pullback here with price approaching that trend line and that support level here, and then we have that other support level down here. And keep in mind, we also have that first primary low here, which would, that and these areas here would most likely be the spots where a lot of traders are putting stop losses. So we can see another set of equal lows, relative equal lows, support level here, which we can also mark up. So now let's take a look. So we can see, now you can see these different colors in the background. All these are doing is basically indicating key moments in time in the market. Everything is significant in the market when you pair it with time. This is Asian session in the white. We can see something pretty important here. We can see price just started moving sideways. When we came into the beginning of London here, or right before it, so that's probably Frankfurt right here, we can see price pushed up, taking these highs and then aggressively pushing down, showing a bearish move throughout London. So now let's dive in even deeper. I'm gonna zoom into this price action, and now we can see this dark background here. That's indicating the overlap of New York Open. So 8 a.m. Eastern right here. You can see it down at the bottom here as well. And all we're doing now is looking at impulsive moves, impulsive move, contraction, impulsive move, pullback, same thing, impulsive move, contraction. So now that I can see this pullback happening, all I want to see now is a signature pattern. I want to see manipulation. So we can see a break retest level here. And what I would be looking for, or what I was anticipating, is price to just push up above this level here. Let me mark it up. Common break retest level there. All I would be looking for here is price to do something like this. Push up and then slam down, creating a pattern, and then look for that entry and then target these lows down here. So let's play this. So there we go. That was the pattern right there. And once I saw this, this is game time. This is beautiful time and price correlation here. And now we have a nice manipulation candle here, that last up candle that grabbed liquidity building here. Nice engulfing candle, clearly an impulsive move to the downside, showing a bearish objective, giving us a nice candle here on the 5 minute. Let's mark that up as well. 5 minute. Let's put our short position on here. If I remember correctly, it was right around 8.6 pips stop loss. And down to the first target here, we can see just under 1 to 9. And then again, into these levels, we're talking pretty serious risk to reward. This one here is 16. So I was targeting here. That was my primary target here. So let's play this out. And I also want to reference something too that was pretty important, was we had a news event. Let's see if I can find this. We had a news event on this day too at 10 a.m. And I'm going to show you how perfectly correlated it is with the news event. So that vertical line right there represents the news event. So I'm going to press play here. So right there, we also had something pretty significant. We have a little bit of a bypass pattern forming. We can see another resistance level here after it broke this support. Looks like price was pulling back, and then it looked like it was leaving without us, just to be forming a double bottom here and giving us a nice harmonic pattern, which is also an indication of price coming down. This is that one retail pattern that I believe really correlates with smart money, especially when you have something like this and you have a nice manipulation candle, because all harmonics basically is double bottoms and double tops. It's finding impulsive moves and then targets. So it identifies the expansion here and then this double bottom and then the pullback into the manipulation candle. And you can see right around that 10 a.m. mark here. And with the news, this thing just had a strong impulsive move. And now that move right there, I had lost a trade prior to this. I had lost 1% on gold. And this one I had 2%. As soon as I had that first move down, I took half my position, which was right around 1 to 4. And that way it covered my losses on that previous trade and covered my losses here, or potential risk that I had here. And then we saw a little bit of consolidation, price kind of messing around a bit before it ultimately came down and took the target. So I'm going to run this out so you can see it's forming a nice little flag here, rebalancing that impulsive move. Came back up, tested that area again. Came back up, tested again, ran that high, but you can see here it still respected this high here. If I drag that over, also creating a new signature pattern here, run on the high, impulsive move, which is a good key indicator that price is ready to go. So that could have even offered another entry or re-entry right here if price wanted to come back and test that. And now we can see price aggressively running to the downside and attacking that set of equal lows there. So really nice pattern. And I hope you can use this information to just primarily identify these traps, avoid these traps, avoid putting your entries and stop losses where other people are putting their stops as well. Identify where these traps are, the stop losses that the majority of people are putting there and accumulating, and use those as targets. So I hope you got value from this video, and I'll see you in the next one.